Hey guys, what's up? In this quick podcast, I want to talk to you about the moves and the daily time frames. So sometimes traders ask me questions. Well, how exactly do you trade? Okay, Leo, we get it. Overall, you're bearish in the market. We get it. You're supposed to short the bounces, but like, how do you actually pick the times? When you enter, when you get out. How do you? So let me just talk briefly about some of these things. The current sequence is something you should be paying close attention to. Current sequence is move 10-11 today. So 10-11 on Federal Reserve decision days. There's only two variations. You're either going to get a move 9 or 10, so that makes it pretty simple. And then you got to watch out that night, that morning, that day for a reversal of the initial reaction. So oftentimes, if the market is indeed bearish, you're going to get you're not going to get a bullish follow through the next day. Now, if you're like an average trader, or like majority of the fucking traders, you're not paying attention, okay? You looked at the Federal Reserve decision yesterday, you're like, okay, they understand the economy's slowing down, so probably going to do a QE. At the same time, I mean, the message was so contradictory from the Fed, it was total clusterfuck. But basically, many market participants arrived at an idea, well, the message was bullish. And I said, man, you're out of your fucking mind. This is not bullish at all. This is this dude has no clue what the fuck he's doing. And so initial reaction of a move 10, which is bullish, and you're looking at the green candles, resolve into today's market reaction, initially higher, yeah. And so you're there, sitting there fucking buying calls. Oh, yeah, we're going fucking high, yeah. The worst is over. The bottom is in. Hey, buy fucking calls. The moment you finally got to a point, you're like, okay, it's safe to buy calls. At that moment, what happens? The market fucking reverses, and you're like, what the fuck just happened? I thought they was bullish. Oh, fuck, I should have listened to 13 market moves. They told me every bounce was going to resolve in a fucking drop. So you probably did that fucking mistake today, and that's why you should pay close attention, not just to what, your 1 minute, 5 minute, 10, 15 minute chart is telling you is going on, but you should just get a better understanding on the context of the market. So most of the traders don't even look at that shit. They don't even look at the predecessor of what has gotten us to this point in the market, and therefore they don't have a clear view of what the market is going to do next. So basically a 10-11 sequence. 11 is a bearish move where it looks like, hey, things are bullish after the Federal Reserve. Yeah. And if you're listening to the news, they're like, oh, yeah, the bull momentum is continuing. We're going fucking higher. And then, 10:30, come 10:30, boom, there it is. It reverses on you. So now move 11 is not as bearish as some of the other moves. But, what happens next is very important. So some of you asked me a question today. Well, Leo, what the fuck? How do you trade tomorrow? And so you got to put it again into context. What is tomorrow? Tomorrow is a third Friday expiration. And so contrary to the general market bullshit that you hear everywhere, I will tell you otherwise. Okay, it's not a good fucking day to trade. Period. Third Friday expiration. They're going to call it triple witch. There are times it's fourth Friday expiration. Call it quad witch. Basically, a lot of options expire. A lot of monthly option expirations come in play. So there's a lot of volume option. But let me tell you statistically what happens on those third or fourth Fridays, when there is a fourth Friday. In out of the 5 Fridays that could happen occasionally in a month. Basically, let me tell you what happens. Nothing fucking happens, okay? Basically, we're talking like a move 5 top setup scenario where it's going to look like market is dropping, but it's not going to really drop. And then it's going to look like it's going high, but it's not really going to go higher. And then by the time you buy calls, it's going to drop. By the time you buy puts, it's going to go fucking higher. So you're going to sit there and mind fuck yourself all day. So those are the days, okay? The only way to beat those third Friday of the month monthly options expirations is to set a position on the prior day, because that is if the context is at 10-11, basically the market decides that what they heard on Wednesday was somehow bullish. I mean, I've heard totally different, and I can argue here that for 13 hours straight. But the market heard it bullish, and so we got a little bullish momentum going. You saw some green candles clearly. But oftentimes it's not the initial reaction that gets you paid. It's the market having second thoughts about the initial reaction that they had on the Wednesday afternoon. And oftentimes it could resolve into a rather brutal reversal or somewhat of a well, we're not sure about this shit anymore. Was it bullish or was it fucking not? So that's what you got today, and that's a move 11. So a brutal reaction would be a move 2 or a move 3 formation, okay? But basically you get in the move 11. Now, understanding the 10-11 context allows you to enter puts today and cash out by 10-11 tomorrow. So basically what I'm trying to walk you through is like statistically, what do you do? How the fuck you do it? So basically you would enter the options at the very end of the day today, and you would actually cash out of those options tomorrow. So for those of you that go and buy like 1 month expiration, 6 month expiration, goddamn 2 year expiration, you'll never make fucking money in options, okay? Because by the time you pay the premium, by the time the move happens, okay, thank God you made a little bit. You're not going to make a ton of money doing that. So you got to understand the time frames. You got to understand the context. You got to understand, by how much of a move in order to pick your strike successfully. So basically what I'm saying is we're going to go lower tomorrow morning than the market, but it's not going to be a big move, right? So don't be going out there. The strategy is not to buy a ton of strikes out of the money. Okay, that's not what you do. You buy strikes close to the money, at the money, okay? And when the move happens, you understand the move is probably going to be done to the downside by 10, 11 o'clock. So, and it's probably going to be a move 3 because sequence 10, 11, 80% probability is going to resolve in the move 3, which means we're going to gap down tomorrow. We're going to go a little bit lower. And then by 10, 11 o'clock, the downside move is going to be over, and then the market's going to fuck with you for the rest of the day. It's going to go up, down, up, fucking down, and there's no way for you to make any money because in order to make money with directional options, you'd better see a decent sized move. So the only way to capture profits, like on a setup like this, 10, 11, you go for a 3 move the next day, meaning that the market's going to, in the morning, it's going to be lower than where it closed at today. Now, it does not guarantee you a huge size of the move. Now, there are moments in the market where you absolutely want to go and buy options out of the money. Okay, now this is not one of these setups. 10-11 does not give you a high probability of a huge move tomorrow. Combine that statistical evidence that the third fucking Friday of the day, the market is going to fuck with your mind. If you're day trading, okay, you're not going to make a ton of money. So your biggest setup is to get in on Thursday and get the fuck out on Friday by 10, 11 o'clock and not even fuck with the rest of the day. Okay? But also understanding the candle formations that we had on March 2nd, March 3rd, calling it the Trump pump, including the shit coins, into the reserve, along with the Bitcoin pump and dump. We recorded video promptly when the stuff was pumping, when everybody was bullish, just to point out that what was bullish to everyone was actually highly bearish to us, and the next day the shit collapses by as much as it goes up the prior day. So the point is, the candle formation communicates to you that it is absolutely a fucking bull to bear reversal. And if you look at the candle formation, like if you pull up 1 hour time frame on your charts, you pull up Bitcoin, you pull up the market, you pull up anything, it's pretty much going to have similar resemblance to what happened to Bitcoin, Ethereum, Solana, XRP, whatever, right? So basically, same thing would be happening with MSTR, Coinbase, and so on. But the point is very simple, okay? Bull to bear reversal was voiced across multiple sectors in the market between which March 2nd, it was a Sunday. So most of you don't even think the market is open Sunday, but it is. It starts at 6 p.m. and that's where your money time is. And most of you miss the money time because you don't pay any close attention to the shit I've talked about in the last 1,000 videos. So set up your account right so you can actually enter trades on a Sunday night. Now, don't worry about this fucking Sunday, but you better have your account set up to trade next Sunday night at 6 p.m. Take a day or two to get approved, options to trade options on futures, to be able to trade options on futures. If you don't know how to do that, get in touch with us at 13mmtv.com. But to make the point, guys, not only do you have to have your account set up perfectly to take advantage of these market movements, but the candle formations is just like such a sure giveaway that the trend has reversed. And the beautiful part is, majority of the market participants, they still want to buy the fucking dip. They don't fucking get it that we're in the most severe bear market the world has ever seen, and this is just the very early inning beginning of it. So if you look at the candle formation between March 2nd and March 3rd, you're going to understand that the candle formation between yesterday and today are identical, with the exception that the move, the size of the candle is smaller. The pattern is identical, but the size of the candle is smaller. So that also points to a probability that tomorrow the market is not going to move as much. Okay, the market is not going to move as much tomorrow on March 21st. So understanding that, okay, automatically you don't go buy a ton of puts out of the money. Okay, you don't necessarily bet on the market to drop in a big fucking way. All right, but also understanding the formation and the history, it allows you to have a good exit on your put positions between 10 and 11 a.m. tomorrow, which is probably going to be where the daily low is going to be set. Now, clearly that could be off by 15, 20 minutes, but somewhere around there in that neighborhood of a time frame, you're going to have a daily low for tomorrow. It may be revisited at some point later in the day, but that would be basically it. The overall move is going to be done. And the reason why you want to take the exit around 10, 11 a.m. is because, well, if the same level is going to be reached later in the day, then tomorrow options expiration are going to be worth less because there is less time left on the contract. I mean, pretty basic stuff. Okay, so with that said, you should be wondering, okay, so the opportunity for the downside is limited tomorrow. When is the next big move lower is going to happen? I'm going to tell you that we're targeting an entry on Wednesday, ahead of the GDP report Thursday, Friday. Guys, I've got some specific dates, specific times where you could catch an expansion of the move to the downside. Yes, to the downside. So the market is so fucking bullish. They're out of their fucking mind bullish. And if you listen to all the analysts and they are reasoning for why they're bullish, it is so fucking ridiculous. It is so absurd. It is so fucking easy to beat the bulls right now. I mean, you could do it with your fucking eyes closed, okay? All you got to do is call a 13 market moves coach. And guys, this is the easiest thing you're ever going to do in trading in your life. Okay, now, I promise you, you're probably going to have to change some shit that you're currently doing, which is like buying calls when you see a green candle, buying puts when you see a red candle. Like, that shit's got to change. So I had a guy recently signed up, and I'm like, yeah, I told him at 10 o'clock this morning, I said, man, we're buying the fuck out of puts, buy puts right now. He's like, Leo, but I can't. It looks so bullish. I'm like, what are you fucking... You're like, dude, you cannot... Okay, it is clear that any idiot in the world can be buying puts when shit looks like it's collapsing. Well, the problem is that that's an average trader is a fucking idiot because he only buys put options by the time it's absolutely clear for him that the market is collapsing. So don't be that fucking idiot, is my point. Okay, you got to enter the position when on the bounce. You do what? Your action is to do what? To buy puts. Okay, when on the bounce, not when shit is dropping. So you got a beautiful bounce like that today on something that is absolutely absurd, like as far as Federal Reserve being like my God, they get fucking, don't get me started on this shit. So Federal Reserve, totally fucked. They don't know what the fuck they're doing. They're goddamn fucking, retards. But the point is, if you don't see that they're absolutely clueless what they're doing, that they've missed every key pivotal moment when they should have switched their policy, and they still can't fucking get it right, and you keep listening to that shit, you're going to get fucked in the markets. And that's why people buying the dip, they're going to get fucked in a major way. It's not like they haven't already, but now they think it's the bottom. And the bottom is so far from being the bottom here, it's not even funny. So, guys, you got to switch your strategy. You cannot be buying the dips, okay? You got to short the fucking bounces. And nobody does it better than 13 market moves, I promise you guys. So understand that while the rest of the market is hoping, like, there are people out there like, oh my God, man, I just hope the market's going to go higher tomorrow. Please, can we get a little bounce? I mean, that was probably you this morning, and then what happens at 10:30? Oh, shit, what happened to the bounce? It's all gone. Oh, my God, the market is red again. It's going negative. I should have listened to Leo. I should have listened to that market, motherfuckers. Okay, so, enough of these fucking emotions. Just understand, it's a bear fucking market. You're short the bounces, but you got to also understand the size of the move, because when you trade options, it's not just like about understanding where something's going up or down, so I told this trader who was reluctant to take the trade on the bounce to buy puts because everything was looking so bullish for him. I said, look, dude, you cannot be like, look, here's 100% certainty. Like, when you guys take the trade next time, if you're very comfortable with taking that trade, I can tell you that trade is not going to make you any fucking money. When you're so comfortable, when you look at your chart screen, when you look at your setup, whatever setup you got, I don't give a shit. You got 10 monitors, 4 or 1, or if you're just trading off your phone, if you're looking at any charts, or if you're looking at the indexes, individual stocks, and they look like they're fucking collapsing, and you're buying puts at that moment, and you're so comfortable with your idea of buying puts at that moment, you're not going to make any fucking money. How about that? So write it down, fucking put it. Don't do that shit, okay? You come to 13 market moves, you short the bounces right before the market is about to make the next move lower, okay? We're the experts in knowing the fucking time frames. Okay, every move comes with a certain time frame. A move 11, a move 6, a move 3. You got to understand these time frames. And bounces within those moves, which are essential patterns on a daily chart, within 1 day, 1 minute chart, they happen with a high probability within a certain time frame through the day. So you wait for those time frames to target your best entries, guys. Okay, so if you're missing all the action, guys, you got to stop this shit. You got to stop doing it. You got to get in touch with 13 Market Moves Coach, 13mmtv.com. Okay, and I'm telling you, you got to have a solid plan of action before the day starts, regardless of whether the market looks bullish or bearish. Okay, if you're too comfortable with taking the trade, okay, chances are that the move is gone, and you might be a little lucky and catch just a little bits and pieces of the move, which means, okay, you're going to make a tiny little bit. It's not why you should be waking up every day trading the markets. It's not just to make a little fucking bit. Your goal is to capture the big fucking move. That's when you make the big money. Yet most of the traders, they only enter the trade when they're 100% fucking comfortable. And by the time you're 100% comfortable taking a trade, guess what? The trade is gone. The big move is gone by the time, majority of the traders enter calls or puts. So you have to put yourself in a situation where you're taking trades that are highly fucking uncomfortable. So if you've never put together a 10, 20, 50x trade, it's because you only take a trade when you're highly fucking comfortable. Okay, and you're only trading on days when it's fucking convenient for you. So you got to eliminate, you want to be successful as an options trader, you got to eliminate those two problems in your trading. One, stop being motherfucking comfortable. Okay, 2, don't trade on days that are convenient for you, damn it. The market don't give a fuck when it's convenient for you to trade. Okay, you need to get on market's timing. You need to be trading the market on market's timing, not your timing. Okay, it doesn't mean your family's not important. It doesn't mean other things in your life are not important. It doesn't mean, but I'm telling you, if you strive to be successful as a trader, if you don't do those two things, then your time spent in trading is going to be a fucking waste. You're never going to make any big fucking money, and that's not going to be good for your family at all. So if you're going to do it, you better fucking do it right. And you want to do it right, you come to 13 Market Moves. Stop fucking around. Trade with a coach, damn it. 13mmtv.com, 13marketmoves.com. Stop fucking off and give us a call today. Let's go.